While you're reading this disclaimer, don't forget to subscribe, tap that like button, and try to play a thumb war with yourself. What is up, Trading King and Queens? Welcome to the next video of the Trading Basics video series. As usual, this is not financial advice. This is for educational purposes only. Today, we are going to be going over entries, exits, and risk. And as I always say during these videos, if you're watching this on YouTube, click the link in the description to get access to the free members area. You get access to all these slides, any PDFs, guides, checklists that I go through, any other resources, as well as notifications of when I go live for free, and you can look over my shoulder as I'm trading. So again, make sure you get access to that members area, and we'll see you in there. So entering and exiting a trade, there's 3 steps here. Number 1 is your stop loss or your risk. You don't want to enter a trade unless you know what you are willing to risk, and you're going to want to set a stop loss. I know tons of people that have used trading bots and don't have a stop loss with, they use what's called a martingale method or concept, and I'll just let you know that I've seen so many accounts completely blown because of that strategy. I do not recommend it. I will only enter trades if I have a stop loss, because believe it or not, sometimes the price goes over your stop loss and it doesn't close the exact stop loss that you think that you're risking. I was, again, not to get sidetracked here, but I was risking $1,000 on a trade once, and I believe I ended up losing around $3,300 because the price went way over, gapped over my stop loss. Another big reason why you want to check financial news. If you want to know how that happened and the whole story about it, I know there's another video that if I haven't already posted it, it's going to be posted on the channel here shortly, so make sure you watch that video. Obviously subscribe. Like this video and all that as well. But I want to prevent you from losing $3,000 in a day unnecessarily because of just silliness. So number 1, stop loss, super important. Entry, well, why and how do you enter a trade? That's kind of important. You want to know when to get in, right? And then finally, you want to know when to get out. Are you going to take profit? Is there a take profit target that you want to hit? Or are you going to allow your stop loss to allow you to get out of the trade? And Adam, you can make money even though the price hits your stop loss? Yes, believe it or not. It's called a trailing stop loss, and I'll be talking about that in a few more slides. So let's jump in here. Oops, went a little too fast. Number 1, determining risk. Again, this is not financial advice. Everybody's scenario is different. This depends upon if you're using your own capital, if you're using a prop firm or something like that. I am typically only using my own capital to trade. That's just me. In other scenarios, it's going to vary. But again, not financial advice. Personally, me, I only risk 1 to 2% of my entire account balance per trade. I try to keep personally around $50K in my trading account, and I'll trade, make a bunch of profits, and then I'll withdraw and bring my balance back down to $50K. Like, Adam, what about compounding those efforts? Well, one, like some people, like you'll pay bills, with your profits, right? In some cases. For me personally, I know a little bit about the tax code. I do want to maximize the amount of money that I'm making in my trading account because of the advantages and the capital gains, which if you're not familiar with, I have a whole video on that in my futures trading course and how that relates to me trading futures. But that being said, I want to do other investments with my profits so that I mitigate my taxes even further. I'll just leave it at that. Again, not tax advice, not financial advice, right? Contact a professional that's been licensed and certified and has an education in that background. That being said, for me, $50,000 account, I'll risk between $500 and $1,000 per trade, give or take, right? If I end up making $2-3 that week or more or that day, it's going to stay in there. I might be risking a little bit more than that per trade if I continue to trade, but generally speaking, the way I do things is by the end of the month, sometimes before, I'll be doing withdrawals from my account, and I'll keep my account balance somewhere around $50,000, something like that. Now, if you're using a prop firm, the terms vary wildly between these prop firms. But if you're risking 1/4 to 0.5% of the account per trade, that's generally speaking a good pocket that you want to be in, and max drawdown is going to vary. Now, if you watch my last video on drawdown, sometimes they only allow you to be in a certain amount of drawdown, not per trade, but total in the account, or you have to have a certain a cap on losses in a day or a week or a month, right? So there's a lot more rules that you need to abide by, which is, again, a good thing if you're a new trader to abide by those more strict rules. At the same time, if you're up 10 grand that particular month, and then you think you're getting a big payout, and then you don't follow those rules, they are not necessarily going to pay you out. Again, I don't mean to be fire and brimstone and throw tomatoes at prop firms, but I'm just being very realistic with you in terms of like expectations. When you're trading with your own capital, do it with proper risk and don't go all crazy. And it's even more so the case with the prop firm with their money. Next, determining entry. Okay, well, why do we enter? Well, we're gonna use our BIT method, the BIT method, to analyze the markets. And then when two of these factors are true, we enter the trade. So if we look at the B for order blocks, I for indicators, or T for trends, as soon as we see some sort of a break in structure, a confluence, a reversal of a trend, whatever it might be, around all of those criteria, boom, we're going to enter that trade. How do we enter that trade? Well, in TradingView, we can enter a trade in several ways. There's quick buy and sell buttons. Typically, those are on the upper left-hand corner of the screen where you can just quickly enter or exit a trade, and you can determine how many contracts you want to buy. Again, I do futures trading, so they're contracts. Or the trading order panel. The trading order panel is really nice because I get to basically define what type of order I want to put in. When you're using the quick panel, you don't necessarily have a stop loss in there. I generally have that those quick buttons off. I don't even want those on my screen if possible, right? I want to only enter through the trading order panel in TradingView where I can determine, again, that risk, that 1 to 2% of my account, whatever it is, as well as how many units it is, how many ticks, how big of a red box that represents on the actual screen in terms of ticks of the price and all that. So yeah, that should pretty much cover it. Again, there's different types of orders, market orders, limit orders. Again, that's all kind of covered in some of my other videos, so I'm not going to go deep into that. But ultimately, you want to be able to determine your entry through the BIT method. And finally, your take profit. Take profit or stop loss. Now, why get out of a trade with a stop loss and be happy? Again, keep watching. I'm going to show you this. So take profit areas can be determined by either a target profit amount. Maybe I only want to risk 1, reward 1. So I risk 1,000 on the trade. I'm either going to make 1,000 or lose 1,000, or I might get out at break even, whatever. But as soon as the price hits that 1 to 1, I might be just automatically taken out of the trade. On a 1 to 3, when the price goes, up, not the price itself is being tripled, but the 3 is 3 times my stop loss. So if my stop loss is worth 100 ticks, 100 tick movement on the charts, downward is the stop loss, 300 ticks up would be my take profit. So again, I can kind of determine in those images, again, I don't have the images, of course, on the screen, but we're going to go through some real examples on a chart in a second, so bear with me. We'll show you the target profit amounts in those cases. A price on the chart, you believe the price action will reverse its direction. So again, order blocks, the top and bottom of a channel. There's different ways to try and determine where that price is going to reverse in the opposite direction. So if you're in a buy, price is going up, 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 up. I want to get out of the trade before it crashes back down and then, swipes back a bunch of those profits as far as that goes. So let's look at some examples on a real chart. So here's an example. We're going to look at the King's Cloud, which is my indicator, and I'm going to look at the Royal Bloodline. So now the King's Cloud here is in green. Green means that you have a lot of buyer momentum. You should be looking for buys and not sells at this particular point, right? So green, think buy. The next is the Royal Bloodline. This was also green. This line right here, green this entire way up, right? So I had a solid green candle above the Royal Bloodline. So the price is going up, going up, going up. We had a pullback. Well, after the pullback, where do I get in? I could have gotten in right here, right at this green candle right here. But then it shot back down, so I just didn't get in apparently. Then the price did not break this low. It did not break the structure back down below this low. It continued up, and on this continuation up, I waited for it not to only continue up, I could have gotten in anywhere here. I waited until we broke a structure above this low, indicating that it was going to more than likely continue up even past this high right here. I'm sorry, this high. So this high and this high, I'm sorry. Woo, I can talk today. Green cloud means I'm looking for a buy. The price pulled back. It went around our royal bloodline, and it went back up. Again, I could have gotten in here. I ended up waiting to here after this second pullback. And as soon as it crossed the royal bloodline and it crossed this break of structure, I was looking for my in. I hit purchase. Now I'm in the trade. This was a 1-to-3 risk-reward ratio, so it doesn't matter if the price hit the hit the 3, the top of my green box here, or again here. I was already out of the trade as soon as it tapped it right here. So again, this is an example of how I entered. My risk-reward ratio was 100 ticks right here. And that means 300 ticks was my take profit. As soon as the price hit it right here, it immediately closed that order, and I was out of the trade. And if I risked 100, I made 300. If I risked 1,000, I made 3,000. So that's one example. So here's the same trade. This is the same trade from the last screen. I'm just kind of zooming back out. So here's the trade. Here's the same trade. Again, what is another reason why I knew this was more than likely going to continue up? The price had bounced off of a buy order block. So in the previous video, I talked about support. So the basketball, the price is bouncing on a level of support, and then it's going back up, and it could hit a level of resistance. It looks like it hit a level of resistance at first here, hit another level of resistance up here. But again, I knew the price was down at the bottom here. We kept hitting this level of support, right? Then I got this green diamond right here. And that was a change from this bigger red. I'm sorry, this isn't the bigger red, but the red, the smaller red cloud here turned to green. And this is actually right at the beginning of a bigger trend. This uglier cloud right here is a zoomed out cloud on a bigger time frame. This particular cloud means that we got in a trade basically right at the beginning of a much bigger trend up. So I might have been able to even stay in this trade all the way up till when it was up here as well. Again, I wouldn't have. I'm glad that we got in and out of this trade. It was perfect. But again, solid. Let me go back up. Price bounced off an order block. Red order block down here. Bounced up. King's Cloud, green buy. Royal Bloodline, green buy. Solid green candle above the Royal Bloodline. And it broke that structure. That's, again, just like I did on the last slide. That's why I get in that trade. This trade was actually both after a shorter time frame King of Diamonds and helped create a larger time frame King of Diamonds right here. So again, keep this in mind for the next slide. So watch that. So then here's the second trade. I saw that we were coming up. We had a high right here, and we were there was a point of resistance. It was bouncing, 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 bouncing. We even had a switch to a red momentum here because it looked like we were creating lower lows. But then the price started to bounce up, and all the momentum still switched back to buyer momentum. So even though it might have hesitated, it was a red cloud for a millisecond here. It's green and green. Lots of green, and it stayed green for a while. So now the King's Cloud, green to buy. Royal Bloodline, this is green to buy. It switched red here for a moment, but as soon as it switched back green, I'm looking at it. A solid green candle above the Royal Bloodline was right here. Got in the trade. Now this 1-to-1, I had moved my stop loss, and I had actually gotten taken out of this trade right here at a risk-reward ratio of 1 to 1.11, which is this right here, 1 to 1.11. Now, I could have tried to get out of the top. I didn't know that was the top. All I did was I moved my stop loss when we hit, when we hit this new high and had some pullbacks that didn't go lower than this. I moved my stop loss probably to break even, maybe even right underneath whatever these lows were in here. And then as soon as the price looked like it was bouncing up and was going to challenge these higher levels, I probably moved my stop loss right to here. And unfortunately, it didn't keep going up, but I got out of the trade right here at a 1.11. Any trade that you get with any profits in the market, I just consider that as free money, baby. I'm excited. It's not free because I risked money in that trade to do it, but getting stopped out in that case at a 1-to-1 as opposed to a break even better, right? So here's what I wanted to show you on this next slide is this was the beginning of a major trend. I didn't know this trend was going to continue in the overseas markets or whatever else. If I had stayed in my original, that first trade from 2 slides ago, 3 slides ago, whatever it was, 2 slides ago, and I hadn't moved my stop loss above break even. I just stayed in the trade as long as possible. This first one got, technically taken out. This one gotten taken out. But if I had just a trailing stop loss, here, wait a few hours, maybe move it underneath here, it goes flying up, and I move my stop loss to this light blue line right here, I would have gotten taken out of the trade right here, but this would have been a 1 to 13.23. So if I had risked $1,000, I would have made over $13,000 on that trade. Again, there's commissions and fees and stuff like that in there. I'm not going to talk about that. But because we had gotten in right at the beginning of this bigger trend, again, we didn't know it was going to happen. And I'm not going to risk all these other big pullbacks for me to lose a huge chunk of those profits. I would have much rather been in and out of trades. But if you're a swing trader and you happen to do a day trade like this, and you're able to stay in this trade for this long as a swing trader, you can get some really killer trades when you've got both things in mind. Both the short-term strategy as well as a long-term swing type strategy. So that is it for this, guys. I hope you really enjoyed this training. Again, like and subscribe. Go through this entire playlist if you can. And make sure, again, you log into our free members area, download all these slides, get access to even more videos, more free training that's available. And we will see you guys there. Take care for now.